Effective internal controls are the backbone of any successful organization. They serve as a safeguard against errors, fraud, and inefficiencies, ensuring that operations run smoothly and align with strategic objectives. In this article, we will explore the value of internal controls, their primary purpose and goals, and provide practical examples of their application in accounts payable and expense management. Internal controls are systems, processes, and policies designed to protect assets, ensure accuracy, promote compliance, enhance efficiency, and mitigate risks. In essence, internal controls help organizations maintain trust with stakeholders, avoid costly mistakes, and support long-term sustainability. The ultimate goals of internal controls align closely with their purpose, aiming to reduce errors and fraud, improve decision-making, strengthen accountability, support operational objectives, and ensure financial integrity. Accounts payable is particularly vulnerable to errors and fraud, making internal controls essential. Here are some specific examples. Segregation of duties prevents a single individual from controlling all aspects of a transaction. For example, the individual responsible for approving payments should not also handle vendor setup. Vendor management avoids fraudulent vendors and ensures accurate payments through vendor verification, requiring supporting documentation for vendor setup, and performing periodic vendor audits. Invoice matching ensures that payments are accurate and based on valid transactions by using a three-way match process to compare the purchase order, receiving report, and invoice before authorizing payment. Payment controls prevent unauthorized or duplicate payments by establishing dual authorization for payments above a certain threshold and using automated systems to flag duplicate invoices. Regular reconciliations identify discrepancies or anomalies in financial transactions by performing monthly reconciliations of accounts payable ledgers to bank statements and general ledgers to ensure accuracy. Expense management, encompassing employee reimbursements and operational spending, also benefits significantly from robust controls. Here are examples. Expense policy enforcement ensures all expenses align with organizational policies by requiring employees to submit itemized receipts and explanations for expenses and rejecting reimbursements that fall outside policy guidelines. Pre-approval of expenses prevents unauthorized or excessive spending by implementing a pre-approval process for high-value or travel-related expenses through an expense management system. Automated expense tracking reduces manual errors and improves transparency by using software to track, categorize, and flag expenses that exceed predefined thresholds or fall under unusual categories. Audit trails enhance accountability and traceability by maintaining a digital record of expense submissions, approvals, and payments to enable audits and investigations when needed. Periodic expense audits detect patterns of abuse or inefficiency by conducting regular reviews of expense reports and employee spending patterns to identify potential fraud or waste. By implementing and maintaining effective internal controls, organizations can achieve several benefits: reduced risk, operational efficiency, enhanced transparency, cost savings, and regulatory compliance. Internal controls are more than just safeguards. They are strategic tools that enable organizations to operate effectively and securely. In accounts payable and expense management, these controls are crucial for maintaining financial integrity and promoting accountability. By adopting practices such as segregation of duties, invoice matching, and automated tracking, organizations can protect themselves against risks and set the stage for sustainable success.